Alrighty, let's have a quick run through of all the pairs, starting with AUD/USD. So we have our sell zone up here and our buy zone down here. I have marked from this engulfing sell since this is a doji candle, or rather it has little to no body. That's why I'm taking this as a continuation sell. Alright, so an engulfing sell meets an engulfing sell. Then for my buy is an engulfing buy meets an engulfing buy. So the current price is tapping into our key level in the sell zone. Since it's quite near to the sell zone, then there's a likelier chance that it will test this zone before dropping down or continuing up. So what do? We wait for H4 to close first for those who are low risk traders and conservative with their capital. Meaning you wait for H4 to come in and close first before you switch down to M15 or M5 to find your setups for a sell. But if you have a higher risk appetite, when the price comes in, you can switch down to M15 and M5 to find your setups and press there. The difference is, with low risk traders, waiting for the H4 to close first minimizes unnecessary risk because you have the decision from the H4 traders rather than following the M5 and M15. You have the decision from the traders in the H4 first before you follow through with M5 and M15 where you ride the wave. Right? So either H4 respects or breaks. So if it respects our sell zone, meaning it does not close above, then there's a likelier chance for us to find a sell setup to sell down. But if H4 closes above, then there's a likelier chance that it might want to test a higher area, which would be this. An engulfing buy failed, meeting an engulfing sell. Okay, but if the price decides to drop down into our buy zone, H4 needs to respect it for us to potentially find buy setups. And if it breaks down below, we can either wait for the next buy zone or wait for the price to retrace back into our key level for a better sell down. All right, remember that since we are on H4, we have to find our setups in M5 or M15. All right, just to make it easy and simple for us. Excuse me. Next, Euro AUD or EUR AUD. All right, so again, my sell zone, my buy zone. My sell is an engulfing buy that failed, and my buy is an engulfing sell that failed. Price came back, closed within, and created this engulfing buy. Current price is in the middle, so now it has to travel. But where it travels to depends on how it reacts to this engulfing buy over here. If it reacts to this, excuse me, and decides to use this to bounce up, then it has to break this for us to come into, or for the price to come into our sell zone. But if this sell, or if this H4 decides to close as a sell, and is strong enough to beat or close below this wick to kill out all the buyers over here, then there's a likelier chance it could test our buy zone. But either way, I will only be waiting for a potential sell over here and a buy over here. If H4 respects either of the zones, then we can catch our sell from the sell zone and a buy from the buy zone. But if it breaks our zones, I'll look for the next zones above and below, or I'll wait for the price to retrace back into our key levels for the opposite direction. Now that you know that we are pairing M15 and M5 for entries and confirmations to our H4 zones, where do you place your SLs? Now, I like to put my entries in between the key levels, right? Or just right below or right above, depending on the setups. I want the setups to form first completely before I press anything. After that, I will count 40 pips from my entry if I do not have time to monitor my charts or I'm very busy and I decide to enter. I will count 40 pips from my entry and that will be my SL point. Meaning, if it decides to touch my SL, I will be out of the trade. Either it can still respect the zone and still go, or it will reverse and go the other side, all right, or the other direction. But either way, 40 pips is not too tight and not too loose. Sometimes when you put 20 pips, it can be too tight, meaning it will touch before going in the direction that you need. But 40 pips will be kind of the benchmark, because if it's touching your SL at 40 pips, there's also a likelier chance for it to break a market structure and go the opposite direction. All right, so if you do not have time to monitor, please do set your SLs, especially for newbies and beginners, just to help manage your losses. But if you have quite the experience and you know where to exit your trades, then you can cut your losses, right? Either way, manage your account wisely. Next, last but not least, Euro GBP, one of the pairs that I really like. Despite it moving quite slow, Euro GBP actually gives quite a good amount of dollars compared to pips, right? Dollars and the rate of pips is kind of worth it because it does big movements and you see very clear zones. You have here, you have here, you have here, and you have here. They're quite clear to see, right? So if you know it's gonna respect here, you can try to catch a sell here. If it breaks here, then you know where to wait over here. If it breaks here again, there's another and another. You know where it might go. Okay, so something to just keep in mind of. Euro GBP is one of the pairs that I love because of this. The zones are quite clear. Now, my sell zone is an engulfing buy that failed, and my buy is an engulfing sell that failed. Price came back, created an engulfing buy. After that, you can see that this candle decided to come all the way down. It tried to break it, but it still shot all the way up to close here. So the buyers over here are quite strong. Okay, so now the current price is over here. Previous H4, is that it? Previous H4 dropped in but didn't close within, and this H4 decided to tap into the key level. If it decides to go, we will not chase it, right? But either way, it can come and retrace back into our key levels again. If it does, then we can try to find an entry. Okay, so always make sure that the H4 are respecting our zones for a buy from the buy zone and a sell from the sell zone. But if it breaks, then you can use the key levels for the opposite direction. Okay, TPs. Now let's talk about TPs. My TP1, are usually set at 20 pips. This depends on how sharp you can get your entry. But I set my TPs or TP1 at 20 pips for a benchmark, right? So I know that I can set my break evens on the rest of my entries because I like to TP the rest at the next key level. Depending on how big the zones are, sometimes the zones are 40, sometimes it's 100, I will hold, okay? I like to hold. I TP at the next zone. So TP is something that you're comfortable with. If you are someone who closes the trade when it runs certain pips, then that will be your first TP. Okay, then you slowly build tolerance to it and increase as you go. Or you can also TP at a market structure, meaning the highs and the lows, depending on you. Alright, so that's it for the 3 pairs, and I will get back to replying to your messages. I still have a bunch to go through, so I shall talk to you soon. Have a good day. Bye!